in our best quarter ever in company history. And we are welcoming everyone here to Mode and what we do. We have a ton of things to go through today, and I'm joined here by our CFO, Prakash. And I wanted to go through a quick agenda here. We have a lot of existing investors. We have a lot of new potential investors. So high-level agenda is we'll be doing a recap on what Mode does. This may be a little bit of a repeat for those of you who have been a part of a community for the last few years. We'll go through a high-level summary of 2025, some of the highlights. That'll also include things of our high-level business growth strategy that we introduced last year. We'll tell you a little recap about that and also how it's been going. Acquisition updates. Prakash will be sharing our financial performance. We recently filed our audited financials on April 30th, so we're excited to share that and a little bit of what we have in store for 2026 and going into 2027. And then we have a new business line that we will be briefly touching on. It'll be a bit of a preview, and we'll do a larger webinar on it here in the next month or two. And then we'll open it up for Q&A for the entire community. All right, so first and foremost, if you don't know who I am Dan Nevias. I'm the founder and CEO of Mode, and joined here, as mentioned, our Chief Financial Officer, Prakash Ramachandran.
Hello, everyone.
Hey, Prakash, thanks for joining. All right, so first and foremost, what does Mode do and how did we get here? The general idea of Mode really started with this idea of rewarding people for the time that they spend on their smartphones. And this is a massive market. There are 7 billion people around the world that have smartphones today. 6.8 billion of them are earning less than $12,000 a year. You have about 18% of people today that have to essentially still live in poverty despite being full-time employed. And then we have 56% of Americans that don't have $1,000 in their savings account. And this gap is only getting larger given the rising cost of inflation, what is happening today with our broader economy, because some of these stats were even from a few years ago, right? And so the high-level idea with Mode is we thought, okay, people are spending 1/3 to 1/2 of their waking lives on their smartphone. And essentially, we saw this as a gig income opportunity off of this abundant resource, which is screen time. And if you don't believe me, there is 168 hours in a week, right, for every single person on Earth. If you sleep 8 hours a day, there's about 112 hours left. And if you look at the average amount of smartphone usage, it's about 40 to 60 hours a week, depending on your generation. So if you're in the older demographics, it tends to be closer to that 35 to 40 hours. And the younger generations, Gen Z, it's about 60 hours, right? So that means that you are spending anywhere from 25 to 1/2% of your time on these smartphones. And so we saw this as a massive opportunity. And if you think about what happened with ride sharing, so those of you that are familiar with Uber, that is a $100 billion market of people that essentially were able to utilize their cars to make a little bit of extra income. The problem is not every person owns a car. And another market that's adjacent to this is the short-term housing markets. Companies like Airbnb, right? People could rent out their homes and make a little bit of secondary income. The thing is, not everyone has a home, not everyone has a car, but everyone has a smartphone. And we see this as a $1 trillion market opportunity. And we're going to dive in to the various parts that make that up. So the first question that we always get, just from an education standpoint, is how does this actually work? What are you getting rewarded for? Do I have to just see a bunch of ads? How does the platform work? And so the idea behind EarnPhone was really to reward you for the things that you're already doing. So those are things like reading the news, playing games, listening to music, trading stocks, anything that you could possibly think of that you're doing on a mobile device, we try to create a reward for. Now, the everyday people essentially utilize this service, they get rewarded for it, and we're going to tell you a little bit of how that business model actually operates. So if you think about when you're using services like Facebook, like Instagram, you're scrolling through the feed and ads are showing, right? You're seeing content, but you're also seeing ads. That money is going to Facebook. That money, when you go on Google, is going to Google. And this is exactly why these are trillion-dollar companies. These trillion-dollar companies are making money off of your time and your attention. And at the end of the day, you are getting nothing for it, because if that product is free, it means that you are the product. And so our business model is really to take that time and attention that people are doing on services and share that revenue back with the consumers. And so the way that we do this today is we work with thousands of different brands. And this is an example of some of the brands that we've worked with in the past. And then essentially we will reward a little bit of that money back to the consumer. We take a portion for setting it up. And then essentially the consumer gets a little bit of rewards. We make revenue and the brands gets a new person that's utilizing its service. So let's use an example of Candy Crush, for example, very famous game that a lot of people play. So Candy Crush wants new consumers to download its app and play Candy Crush. And so they may be willing to pay $10 for a new person that comes into the ecosystem and plays Candy Crush. What we'll do is we'll reward you per minute you play that game. So that might be over the course of a week, you spend a few hours, and then you might make $5. At the end of the day, you build a habit, it's a good game, and then Candy Crush is happy because it gets a new consumer that likes its product, and then you earn a little bit of reward for doing something that you probably were going to do anyways, right? And so when Candy Crush is marketing on Facebook and Google, they're paying those platforms, but you get nothing of it. So this is just a way to equalize and really bring a new business model that is more fair to end consumers. And that's essentially what the Mode Earn OS does, which is our rewards and monetization software solution, right? And we're going to talk a lot about that today, and I'll dive into it in a few different areas. So the next question people often give us is, exactly how does the business work? Do I have to have your phone in order to earn money? And the answer is there are multiple ways to take part in our ecosystem. One, you can download our app on the Google Play Store for free. There's no cost to it. And effectively, you can transition your smartphone into an earn phone, right? So that is the first and where we started, the business. The next phase was we actually built our own device. Our device that pays you, we called it the Earn Phone, and you could essentially earn faster by having this proprietary device. And then now the most latest model that we have is we are starting to apply our technology into other apps and services. And we're going to dive very deeply into this. And the new thing that we really mostly focus on now is the Earn Phone sold out. And we weren't really in the business of actually creating hardware. We really just wanted to get it into the market. And we were very fortunate to get it into Walmart, Best Buy, Target, Amazon, all these major retailers. And now we're starting to license that technology to carriers and OEMs. So that means that you might see a Verizon Earn Phone or an AT&T Earn Phone or a Samsung Earn Phone. So very similar to how Roku operates, if you're familiar with the smart TV market, they license their technology to TCL, to Panasonic, to these major television companies. And the reason that you've seen televisions go down from $1,000, $2,000 a television down to all the way for $100 for like a 50-inch television is because the money is being made on your advertising. When you watch that television every day, commercials play, and that money is being made by Roku and is being shared back to these television companies, right? So this has happened already in the market, and that has created a $15 billion or so business just for Roku alone. And the smartphone business is much, much larger. So we are the closest company to make the smartphone free or better for 7 billion people around the world. And we think that that's why this is such a large market opportunity and no one's doing it. So we've been very fortunate. When we created this business idea, we had a lot of people that were naysayers about it. We're like, do really people care about making a few extra bucks on their phone? Will consumers adopt it? And, we were very fortunate and saw that the company actually really took off. We took off to the point that we actually had a 32,481% growth rate from inception that ultimately got us #1 on the software list for Deloitte Fast 500 in 2023. So this was earlier on in our journey, and we outranked some of these major players, which you see here on the screen. We had media pick a lot of this up over the years. And last year, we had a great recap of a ton of different networks that really showed what Mode is about, what we're able to do. And over this past year, we've had new recent accolades, a ton of new collaborators, and also some shareholders that are pretty notable. Most recently, the company was honored with the Entrepreneur of the Year for Ernst & Young. I was honored with that, but obviously it's everything that we do here as a team at Mode that has made that possible. And also this community that has been able to back us to get us to this point. So there's a ton of progress happening within the business. And that ultimately led to where we stood as of December of 2025, right? Which is our recap of 2025, where thus far we've had over $150 million in pro forma cumulative revenue. we are now at over 100 million monthly active users, meaning every single month, over 100 million people are using Mode Mobile products. And we are approaching, we probably have actually surpassed this now, but 500 million installs, right? And so generally, the business is going quite well. So one of the areas that we spoke on last year was really this transition into expanding the EarnOS business. And we wanted to share, we called this our 100 million plus growth playbook, right? And so the goal was to, how do we get to $100 million in annual revenue in the near term? And this is an update on that. So first, let me give you a high level background of this for especially those of you that are new to the Mode community. So something in the private equity space is very common in the private equity space is called a roll-up, right? And this is essentially where a lot of businesses, these private equity companies will buy up doctor's offices, accounting shops. Now you're seeing a lot with like blue collar businesses like HVAC companies, and they'll buy like 10 of them and they'll create value out of that. Some companies have been able to do this roll-up strategy at significant scale. An example is Constellation Software. This is probably one of the most iconic companies that have done the roll-up strategy at scale. Publicly traded company, spits out tons of cash flow, $60 billion market cap. And then a company that most of you probably know, famous by Warren Buffett, Berkshire Hathaway. And these are $1 trillion markets. And so they buy up businesses and essentially are able to scale those businesses through this broader roll-up style strategy. So for us, we looked at the roll-up as an opportunity to grow our business. But we thought about it with a little bit different on a lens, which I'm going to dive into here today. But if you think about our company in 3 phases, so phase 1, which I had introduced previously here about 10 minutes ago, was really this idea of building the platform. So we built the app, we built the EarnOS, we built the EarnPhone. And so it was really creating the baseline technology to power everything. The next phase was really this idea of like, okay, we're really in the business of actually sending consumers from our core product into third-party products. So going back to that Candy Crush example, right? Candy Crush is paying us, and then we essentially send someone to Candy Crush, and then we get paid, but then that transaction ends. So we started thinking, okay, let's think about Amazon, right? Many of you probably shop on Amazon. I'm an avid Amazon shopper, and Amazon has the marketplace. And so what that means is that third-party brands like Clorox or Adidas or whomever can sell on their marketplace. The thing that Amazon doesn't really tell those sellers, but it's widely known, especially now, is that once a product starts selling very well, sometimes Amazon will decide to make that product, right? And so this could be Amazon Basics. So if you've ever seen Amazon Basic cords or baby wipes or things of that nature, they will make that product. And this happens at the grocery store too. If you're a Costco shopper, Kirkland brand goes and competes with brands like Grey Goose or whomever in vodka or whatever. So this is very common. So we thought to ourselves, could we potentially go out and acquire other apps and games that could compete and provide a larger amount of things that our community could do? And then essentially we can also get that cash flow from those apps that we acquire. And so obviously we're going to have the opportunity for the TikToks and the Candy Crushes of the world, but people don't really care what solitaire game they're playing. And if Mode happens to own that solitaire game, we can send our consumers into those products and then we get more screen time. And so really that was this idea of acquiring synergistic apps. What we then realized is that we could actually even take the EarnOS and apply it into those businesses as well, which I'm going to talk about here in the next slide. And then the third phase, which we're going to briefly talk about today, is this idea of being able to scale this at the international level. Mode is already in an international company, but a lot of our revenue, majority of our revenue still comes from the United States. And then now we're starting to license this technology and expand into new revenue formats within the AI sector, which we'll talk about here in a few slides. So again, how do we unlock value? Mode started acquiring profitable gaming and utility products, very similar to the roll-up strategy. We then cross-promote those products within our ecosystem, and then we apply our proprietary solutions, the EarnOS, into better monetizing those products and scaling them within our ecosystem. And that model has worked very, very well for us in 2025. The thing that's essentially happening here that's maybe not as common with traditional private equity roll-ups is that we are creating a network effect. The more apps that we buy, the more users that come into the ecosystem. The more users we have in the ecosystem, the better economies of scale we have. That means more advertisers, better costs. We can apply technologies through all of these products that essentially overlap. And then that ultimately equals to more revenue and more payouts for our broader community. And so we look at this almost as a user acquisition strategy, but one that is highly, highly profitable. And we'll show you how. So ultimately, if you look at 2025 pro forma, our revenue was just under $40 million with with nearly $12 million in EBITDA, right? And this is a tremendous growth from where we were previously. And Prakash is going to tell you where we intend to go as we continue this model, but we've seen a ton of growth from it. In addition to the revenue growth, we've also been able to continue scaling our earnings and savings to consumers, which means essentially more earnings and more savings. And we plan to continue doing that through our new initiatives that we'll talk about here in a few slides. So today, what does that Mode mobile product suite look like? So if you look at all the way to the left here, that is where we started. We started with the Earn app and the Earn OS and the Earn phone. Over this last year, we have made a series of acquisitions that have brought in a ton of profitable products that have continued to scale this portfolio. And now we are starting to see continued growth in that and are continuing to dive into that model because the unit economics have been amazing. So an example, this is our list of acquisitions from Q1 of 2025 of last year to Q1 of 2026 this year. You can see that NGL is an app. It's a Gen Z focused app. Very profitable company. And we're able to buy these companies at 2.5 to 3x on cash multiples. That means that essentially we are paying a valuation that within 3 years, we would pay off the entire asset. Now think about when you buy real estate, right? Most real estate developers are not going to pay off that asset for 15 to 20 years, right? It takes a long time. That's if you're getting a really good situation and there's a lot of upside. For us to be able to buy these products at the 3x valuation that we're buying, it is a screaming deal for the company, especially given that we're able to then apply our technology to them and improve these products. In the private equity space, the normal multiple is 6 to 10x. It really depends on the scale of the business. And this is an example of what we're able to do with a lot of the capital that we've been able to raise, which is why Mode continues to raise capital, which a large portion of that capital goes to furthering these acquisitions, which furthers our user base and the growth of the Earn OS that we ultimately build within the company. One special treat that we have today, and we have never announced it, is that we have an acquisition that we completed in Q1 of this year, but it's the first time that we will be publicly announcing it. And so I'm not going to say it now because I have another slide on it, but we are excited to share it with the community here. This is an example of our pipeline. So one of the big focuses that we've had is how do we find more of these companies that fit within our narrative, that we can grow, that we can continue scaling, that are within the right valuation range, that we can monetize in a unique way. And you can see our pipeline is enormous. We have $80 million in cumulative revenue that we can go out and acquire and $25 million in cumulative EBITDA, right? So Mode only acquires profitable businesses. We do not buy businesses that are bleeding cash and primarily are focused in the app space, right? Which allows us to basically integrate these new companies in a matter of weeks, as opposed to a matter of months or years that you would see in traditional private equity. So it's a very unique model, especially for where we are in time and space and how Mode is using tools like agentic AI inside of its ecosystem. So we're going to dive into other parts of that acquisition strategy in a second. I'm going to transition it over to Prakash here to go through our actual financial performance as of Q1 and how the company has been doing over the last year.
Thank you, Dan. Good morning, good afternoon, wherever you are. We have done exceptionally well in Q1 this year compared to Q1 last year. You can see that our revenues have actually gone up from $3.5 million to $13 million in just in one quarter. And that's a phenomenal increase of 268% increase. You can also see that our adjusted EBITDA, which is a measure of profitability. EBITDA stands for how profitable you are. We were nearing break even last year in Q1. We had a loss of $296,000. This year, Q1, we are exceptionally profitable, $2.3 million in adjusted EBITDA, which is almost close to 877% increase from last year. So the performance has gone up really nicely. The other impressive achievement we had in Q1 was that we got our last 2 years financials audited under the Public Company Accounting Operations Board standards, PCAOB standards, which is not a very easy one for young companies to do. We have done it, and we now have 2 years, which is the minimum amount of 2 years is the minimum track record of PCAOB audited financials that you need to go public. So we are laying the groundwork, not only in terms of just the financial performance, but also in terms of all the other requirements to go public down the road. So we can go to the next slide. In the same period, Q1 last year to Q1 this year, you can also see that our assets have increased substantially. These are all the investments we have made to acquire various assets, various apps that Dan talked about, but also in terms of cash balance and receivables. All the assets we have ballooned quite nicely from $28 million to $94 million. Very, very impressive growth in the asset base. Similarly, our equity base, which is the amount of capital that remains in the business, has gone up from 16.8 million to 55.3 million. So all the indicators of the financial performance are all trending upwards and are all heading in that territory where we can then get large enough to go public very soon. If you look at our current expectations for this year and next year, this is 2026 and 2027, the 2 calendar years, you can see the growth of revenues growing to 103 million by end of this year. And that includes acquisitions. So the 103 million includes the acquisitions we are planning this year as well. Similarly, our profitability, we expect to end this year with a run rate of $35 million in terms of profitability, EBITDA. And that is, again, including all the acquisitions. Based on this growth, we can then grow the company, including some new acquisitions next year. We can grow it to 200 million in revenues and 78 million in profitability. These are substantially improved numbers from where we were 1 year ago or 2 years ago. And you can see that at the bottom, the recurring revenue mix, this is the subscription revenues. At the end of this year, we will be at 57% recurring revenue. At the end of next year, we will be at 65% recurring revenue, subscription revenues. That's also a very good metric for the company because subscription revenues tend to repeat year after year after year. Also, they are higher multiple in terms of the company getting valued in the public markets. So clearly, we have a lot more good things happening as we are scaling the revenues, as we are scaling the profitability. We are also improving the quality of revenue and the quality of profits in this mix.
Awesome. Thank you, Prakash. And yes, we are very excited. A lot of the businesses that we are focused on the M&A side do have a lot of reoccurring subscription revenue. And one of the big strategic levers that Mode has is that we've been very good at figuring out how to monetize consumers that are also free consumers. So most products, if you have 100 people using a product, it'll something be along the lines of 97% of people are not going to pay that for that product. They're going to have an ad-supported plan in some capacity, and 3% are going to be going to pay for it. Mode is very good at monetizing the free users, right? Because that's where we came from. Really, this idea of being able to create money from just using your phone is a novel idea. No one was doing it. And so that's one of our strategies is buying businesses that have a lot of great subscription revenue, but then maybe are under monetizing the free consumers in that product. And that is something that is part of that idea of how we can create so much value for these businesses that we're buying. Okay, so we have a very special little preview. This is going to be a much larger session that we'll do in a future webinar here again in like probably the next month or two. which we are doing some very unique things in the AI ecosystem. And this is not just how we operate as a business, but some of the product offerings that we have. So let's start with a high level on what's happening in the AI space, right? So many of you are investors. You've probably seen these two names everywhere, Anthropic, OpenAI. These are essentially the two fastest growing frontier models. So, OpenAI is the maker of ChatGPT. Anthropic is the maker of Claude. And these companies are poised to become the most valuable companies in the world. Right now, the AI space is an arms race. Every major company from Google to Facebook are spending billions upon tens of billions upon hundreds of billions of dollars because it is a winner take all market, or, it's going to be two or three of these. And this is the equivalent of the Industrial Revolution for our time and age. Now, why does this matter at Mode? And, one of the things that people don't really understand on how AI works. So AI has three key ingredients, right? So the first is compute. And that's why you see companies like NVIDIA, Intel, these chip companies, ARM, et cetera, all skyrocketing in value. You've seen that over the last 2 or 3 years. So that is the compute side. And within compute, there's energy and all those things that make up the ability for these AIs to operate. Now, the second thing that an AI model needs is the algorithm, how that software is constructed, right? These softwares have been being built over the last 10 years, and it took forever for it to essentially get to the point that it is today. But the third ingredient that a lot of people don't know about, and is probably the most important ingredient, is it's trained on your data. It's trained on human data. Essentially, these AI models have sucked up all of the internet over the last 20 to 30 years into their models. And a big component of what they need is now the refinement of that data, because they have nothing more to go through, right? It's already gone through all of the libraries, which is why these companies are, relatively useful to AI models, but at the same time, they need new data. And right now, there is a lack in the supply chain for on-demand data. Some of the fastest growing companies today are the companies that are able to provide this expert level data and generalist data. And that's something that we're going to dive in deeper in our future webinar here. I'm not going to go too deeply into it today, but it is a monster market, because the human data market is the bottleneck in the AI industry. It is not going to be compute. It is not the data centers. Those things are all going to happen, and there's a lot of money being invested in there. But the human data is what makes up these models, and these AI models, in order to get more and more sophisticated, will need new forms of data. Now, what ultimately that means is consented data. So the software industry over the last 20 to 30 years has a dirty secret that they never told you about. And effectively is when you use their products like Facebook, Google, almost any product, it's utilizing your data because you're consenting to it by being a product, by using that product, right? And that goes back to that idea, if the product's free, you are the product, right? And the big thing that's also happening in the space is that a lot of these models were training off of data on services like the New York Times, the Wall Street Journal, Reddit. So these popular content sites. And so far, there's been multi-billion-dollar lawsuits being settled by Anthropic with these companies because it trained on data that it did not own. So that means unconsented data. So one of the biggest things happening in this space right now is this idea that consented data, meaning you need to give it permission to be able to train on the model. And so it is now popping up because these companies cannot train on that data from the past. And so this opens up a big opportunity for companies like Mode. Because at the end of the day, we are in the business of making a trade with people. If you download this product, you will get a reward. If you share this data, if you do take this video, if you do this activity, you will get this reward. And so we see that as a big opportunity for our broader consumer base. And so the opportunity here is, we believe, to be a $1.7 trillion addressable market. Now, this is different than the market that we already had previously focused on in the smartphone space a few years ago. We actually think the TAM is growing because the human data market is going to be so big. And we're going to dive into that deeper again in another session. But what I will touch on here is that one of our latest acquisitions, which we're about to announce here in the next slide, has to do with that same idea. Now, you might be surprised with it, okay? So Mode has recently acquired one of the largest QR code readers in the entire world. especially at least in the iOS store. Now, a lot of people thought, like, why would you acquire a QR code reader when your camera could do that? Well, there are limitations to the camera QR code reader, but a lot of consumers want just a QR code reader. And when they think of the word QR, they go into their phone and they type it and they don't go to camera. And we saw this trend where this app was providing $5 million in EBITDA, over $10 million in revenue. And the vast majority of that revenue was reoccurring. So going back to what Prakash said, 70% of people were paying for the premium services of this QR code reader because it can make your own QRs. It has all these other analytic tools that people can do. And people generally were very sticky in the product. And so we saw that as a great opportunity. It was the right valuation. And we could continue stacking the opportunity within the Mode portfolio. But what we also looked at was that there were over 230 million barcode scans per year. And so Mode can take that data because what are people scanning? They're scanning Amazon products. They're scanning things they want to eat. They're scanning menus. And all of that can be utilized for training data. That can be utilized to improve algorithms for trading for hedge funds. That can be utilized for market research for big CPG companies like Kraft or P&G. And so it's a revenue line item that the founders that we bought it from weren't even thinking about. And most founders don't think about the data monetization because this market is rapidly emerging. If you're familiar with the data market, companies like Nielsen are $21 billion plus behemoths. There are companies that are being sold in the AI training side, a company called Scale AI, which recently was acquired by Facebook at a $29 billion valuation, right? And so this is a monster industry. And in our upcoming presentation, we're going to dive much, much deeper into this. But one thing that I'll leave you with our acquisition strategy that has emerged is if you think about where we started, if you look at the bottom left, Mode, Earn App, and Earn Phone was really about a very budget conscious audience, right? Anyone that needs to make a little bit more extra money on their phone is going to be budget conscious by the nature of the product service offering. As we started acquiring new products, every time that we acquire a new product, we have a different type of demographic that we are now integrating into our broader ecosystem. So if you look at NGL, that's massive with a Gen Z. If you look at AppLock, it's massive with families, right? That app was an app where essentially you have to type in a PIN code to get into a specific app. So a parent could give their phone to their child, and if they don't want it to get into their email or into their photos or whatever, you could put a PIN code to a specific app as opposed to the entire phone itself. Very simple product, but a lot of parents using that, right? We have an app called Trimbox, which allows you to unsubscribe from spam email. And so that is big with tech professionals. So you see what's happening here is that you're starting to see the semblance of a multi-demographic information within our ecosystem, which is very similar to how companies like Nielsen have been operating for the last 100 years. And so this is really expanding the TAM, the total addressable market for Mode, beyond budget-conscious consumers to multiple types of people that are sometimes wealthy, sometimes not wealthy, sometimes older, sometimes younger. And that allows us to have a lot of diverse data, which is very, very valuable and a big monetization opportunity. So anyways, that's a little bit of insight of some of the stuff that we've been working on, and we're going to have a ton more for you guys here in the next month or two. Okay, so pre-IPO offering and road to IPO. So this is something that we wanted to touch on. Some of you, this might be a recap, especially if you've been one of our investors, but we do want to provide some background and context to the people that are new to our community. So the first is one of the questions that we also always get is, why did Mode choose crowdfunding? What and how did you come up with this idea, or why did you focus on it? And at the end of the day, we see that retail investors have a lot of power. The retail markets since COVID, especially since COVID, where fractional shares became possible, where everyone effectively became a trader, and especially now, asset owners have a huge advantage in broader society. Retail has a lot of power. And Mode has always been a company for Main Street. We started with the idea of rewarding people for their everyday usage on their phone. But then we were like, we should be able to take earners, which is what we call the Mode community, and turn them into owners, right? And it's very rare when we look at companies like OpenAI, or you look at companies like Anthropic. These are awesome companies. But the thing is, they're left for insiders. And that an insider essentially means someone that is from the Silicon Valley ecosystem, wealthy individual, And the thing that's very interesting about retail investors is that you can build that following and you build that base. So one of our goals is, how do we get to 1 million shareholders? Because if people are using your product, but they're also an owner of that product, they're way more supportive of what you're doing, right? And that's really this idea of what got us into this ecosystem. And when we started thinking about the future of a company, and we started thinking about where do we create value and liquidity for the company eventually, really it was this idea of going and doing an IPO. And then we created this concept called the social capital multiplier, which means essentially if you have great financials and you have a very strong community, you're going to be very successful in the public markets. And here's some examples of companies that we've seen do that, right? So Tesla is a great example of this. Tesla is obviously led by Elon Musk, who does a variety of things, but is obviously an extremely competent entrepreneur, the richest person on earth. But there's a reason that Tesla trades at 396 price to earnings ratio, and a company like Ford trades at like, I don't know the latest number, but last I checked, it was like an 8, right? That is a huge difference, right? And so companies that have a following and that can also execute on financials will have outsized returns. Another example of a company that has a great community is Berkshire Hathaway. Very few public companies sell out stadiums. Actually very few musicians sell out stadiums. But every year, people travel across the world to go to the middle of America to essentially go to this conference. And that shows in what people say and believe about Berkshire Hathaway stock, right? An example that is a little bit more unique, right? With the meme stocks, people were piling into GameStop, and all these retail investors essentially did a short squeeze on all these hedge funds, right? So much so that they made a movie on it, and now GameStop is sitting on multi billions of dollars, and then putting out bids to buy companies like eBay, right? And so it's can be happening in many different ways. And then lastly, Reddit, which is a massive content platform. They allowed their consumers, their users, to participate in the IPO. So the Reddit moderators. And that company has done quite successful, and in fact is also now selling the content on Reddit for tens of millions of dollars to these AI labs, licensing that content that's being created on there. So that's just a tidbit that ties into the previous slide, but they've been very successful in involving their community into their broader story, right? And so at the end of the day, that is what Mode is thinking about and how we're operating. We have reserved our Mode ticker symbol through the NASDAQ. Essentially what that means is that gives this 2-year window that we have an intent to IPO. And essentially, as Prakash was mentioning, we are on the road to that. So doing this PCAOB audited financials was the first step into getting into that, because you have to have those financials in order to go and list. The other dynamics that we're thinking about is that we're talking with banks, we're talking to IPO advisors to figure out what is the best way that's going to create the most value for our community and our broader shareholders. That typically means a certain amount of revenue, a certain amount of profitability, and also a narrative that analysts can understand and grow upon. So for us, we've really been deeply thinking, okay, today, what is our revenue mix? Is it subscription revenue? Is it advertising revenue? What about this data side? We are going to see a lot of growth in that. I believe that that's going to be a large part of our revenue. And these are things that we want to think about as we tell our story to the broader markets, right? So these are things that we're doing and thinking about. But in the meantime, all of you are here today because you probably saw one of our adverts, or you saw someone that invested in the company. And thus far, we have over 60,000 people that have seen this mission, have seen this vision, and have joined on to the story. And we've raised nearly $80 million through crowdfunding. We are one of the largest crowdfunding companies in the entire world, right? And today, you can take part and join our journey for 50 cents a share, which that share price will be changing on Friday. And so we are doing this earnings call that we would do anyways, just given the time of year, because we file our financials on April 30th. But that's something that anyone here can join. One of the things that we also get as often as questions is how the bonus shares work. Mode is obviously very focused on the idea of helping and rewarding and incentivizing ownership, not only through your usage of phones, but also through becoming an investor in the company. And so bonus shares is something that we always go over just because it can be a little confusing for people. But the first thing I'll call out is you might have seen a little QR in the bottom left that says 5% bonus. So just by attending this webinar today, you have unlocked an extra 5% bonus if you decide to invest in the company. That will be attributed to you for attending. We have a software that allows us to track that. And so that is one of the perks that we wanted to give for you taking your time today to join us in the middle of this Wednesday afternoon. The next thing is the bonus also matters depending on the investment size. You can see here on the right that the more that you do invest, the more bonus shares that you will get. And that is essentially the incentive mechanism of how these things operate. So one of the unique things that we do within Mode that at least as far as we know, very few other companies do that are participating in crowdfunding is this idea of stacking your bonus shares, right? And so what that essentially means is that if you invest in the company today at $2,000 and then say, 3 weeks from now or a month from now or whatever, you want to invest before the round closes another $3,000, typically you would actually be subject to the same 5%, right? Because it's under that $5,000 amount, that $4,950 amount. What we do at Mode is we allow people to stack their investment. And so this means that if you invested at any time during this round, and then you decide to reinvest again, we will let you count those two investments as a single investment. And so this essentially will yield you 25% more bonus shares due to stacking. And that is just one of the perks that we have. Previously, we had a lot of people that were like, I can't invest, $5,000 today, but I could do it probably over like 3 months. And so we wanted to create something that allowed those people to still get benefit and supporting the company, right? So that's how stacking works. And it's something that we always need to talk about because it's a little confusing. And so if you have any questions on that, our team will be happily to answer that from you. And one of the places that you can look at the stacking and these exclusive bonus opportunities, if you are an existing investor, is the Mode Investor Club. So the Mode Investor Club, which the website is modeinvestorclub.com, I would highly recommend for you to join and go there because that is a portal that we specifically built for our shareholders. Again, our community is a big part of why we're here, why we're able to do this. And so we want to think about what are ways that we can create perks and benefits for that community. And this was essentially built so you could have an easy place to see what are your holdings, how much do you own in the company, what are those shares worth today based on the current private market price and the current valuation of the business. And we also have other mechanisms that allow you to take part in larger bonus opportunities. And so highly recommend everyone go through and check out the Mode Investor Club. If you have not yet, you can just go to that site, type in your email, and it'll send you a login code. And our team is happy to also, if you have any issues logging in, please shoot us an email, which you can go at invest@modemobile.com, or feel free to call this number. We might have a lot of people calling it right now, so our team will do our best. We do have a set number of people there that can take on those calls. But if you leave a voicemail, we will call you back. Or you can email us at invest@modemobile. With any questions. So not only if you're an existing investor, but even if you're considering becoming a new investor, our team is here to answer any of your questions. And again, as a reminder, our share price changes Friday, 5 p.m. Eastern. We will send reminders on that. And I believe that's what we have for today. I think we're going to dive into some questions now. We have about 17 minutes for the end of the hour. And so we'll dive in. Okay, first question. Gabe has asked, I have 15,000 shares. Is it reasonable to assume that you will wait until you hit a number of shareholders and or sales profit level to go IPO? So first, Gabe, thanks for being a shareholder in Mode and supporting us. As mentioned, the idea behind what is really thinking about how we think about our IPO strategy has to do with a few different things. The first is on the regulatory side, we needed the PCAOB audited financials. As Prakash mentioned, that is a significant lift for companies to get through, and we're very proud that we were able to get that done. We had to upgrade our audited financial firm for that. But the other components is really we have an amazing opportunity here. And you can only go public once. You can't re-go public after you've gone public, right? And so we need to think about that in a intentional way to maximize value for every single person. What that essentially involves is, we need to think about things like, what is the valuation that the company is going to come out at? How is the market currently shaping up? What's the best way to go public? Do you direct list? Do you SPAC? Should we go the traditional route? So these are all considerations, and we're talking to a lot of different advisors on this to really think deeply about this strategy. Another thing is, how do analysts perceive your business? Are you an AI company? Are you a mobile company? Are you a tech company? So these are all things that are, the market's it's constantly changing. And so one of the things that we've been thinking about is like, okay, we see a path to getting to $200 million in annual revenue, right? Which that's what Prakash was mentioning in 2027. We want to be able to defend a certain valuation in the market, because once you get to a certain valuation and you're on the index funds, companies like Vanguard and the Fidelities of the world have to buy your stock, because that's part of how they operate internally. So these are all things that we're thinking about as we think about our public journey. And so the way to think about it as we filed for the MODE ticker symbol is that within 2 years of that time, you have an intent to go public. So the company is actively working towards that right now, which is why we are in this pre-IPO phase. So hopefully that answers your question. Thank you so much for being a member or a supporter and investor of MODE. Okay, next question. Is the MODE app available on the Apple Store? So Steve, this is a great question. Steve, thank you for your question. MODE was actually originally made for Apple back in 2019, but then we saw so much traction on Android, because Android users tend to be more budget conscious and it's more of a worldwide audience, that we decided to sunset the Apple product and only focus on Android, especially once we decided to launch our own phone, which was built on top of the Android ecosystem. Most recently, Apple has changed its stance on rewarded apps, and now we see a massive opportunity in Apple. And so we do actually have an Apple product launching it'll likely launch at the end of this quarter, if not in early Q3. And so we've been working on it for this past year, this past year in 2026. And so we will definitely notify the community once our earning products are available on Apple. Now, what I will say is that is focused on the Earn app in particular, that you can earn from your phone on iOS. But we do have a whole suite of products that are on iOS. So an example, our QR code app, the NGL app, the Trimbox app, all these other products that are also utilizing our technology within them are in the App Store, in the Apple stores. They're in the Android store mostly as well. So that's the caveat, right? So we are excited to launch that, and that's going to open up a whole new market, and one that I believe is going to generate a lot of growth and a lot of revenue for our community. Okay, sorry, I'm dealing with some allergies today. I feel like I'm going to sneeze and apologize. So Mary is asking, how can I keep track of the value of my shares that I already own? So Mary, the best place to do that is to go to modeinvestorclub.com, right? So if you go to the modeinvestorclub.com, you type in the email that you invested with, and you will be able to see exactly how many shares you own, what the current valuation of the company is. You'll be able to get linked to where those shares are held and all this other information. If you have any problems with that, feel free to send us an email at invest@modemobile.com, and our team will send you a link and walk you through that. We have about 70% or so of our community onboarded into that ecosystem, and people speak very highly of it because it's something that is a bit confusing, especially if you do invest in other crowdfunding companies. They don't have a platform like that. And so it's been a big hit with our community. So I would highly recommend you check that out. So thank you for your question. Okay, next question is from Bruce. Can I refer another investor, and can I share a link to a repeat of this webinar, as they were not available to be here live? So first, Bruce, yes, we will be actually sending a summary and a recording of this webinar to everyone after this, especially if you had to tune out early or came in late. So that's something that we'll be sending out. And yes, you are more than welcome to refer a new investor into MODE. We do have a program that will likely be rolling out to existing investors for them to share with friends and family, where you will actually be able to take and earn a reward for inviting them to be part of our community. So it's something that we'll be rolling out here in the next month. We haven't announced that publicly, but since you asked the question, we'll let you in on the upcoming plans. So next question is from Ian. What do you think? What do you take in consideration when choosing a potential underwriter for a possible IPO? That's a great question, Ian. I think for us, the first thing that we're considering is what's the best format for us to go public. MODE has the luxury to have enough shareholders that we could do something like a direct listing. But the other things that we're considering about is, some companies do a SPAC because that's quicker. And I don't want to get into all the details of like why a SPAC sometimes it's not a favorable outcome to companies. But what I will say in terms of like the format that we're taking, whether it's traditional, whether it's a Reg A into an IPO or a direct listing, really has to do with our business model. Most companies are burning and incinerating cash, especially as a tech company. Most large scale tech companies are not very profitable, and they burn a lot of money. And that's normal, especially in the early years. But for us, we've been able to find this business model that is essentially able to print cash as long as we have cash to go out and acquire other great businesses that we can then better monetize. So for us, it is important for us to raise incremental cash as part of that IPO process. And because when we IPO, you don't want to just IPO and then let it sit there, right? And you have to have your next plan. You got to think about that next 12 months ahead of time. We try to be very intentional here with how we think about things and the future roadmap of the business. So when we're thinking about questions like the one you're asking, we're thinking about what is the best path for us, and what is going to bring in the right amount of cash, and who are going to be the acquisition targets that we're going to have and we're going to announce to the market soon after an IPO. Because once the IPO happens, you can see that a lot of companies go out and then there's a crash in their stock price. We don't want that to happen. We want to be able to defend that stock price and think about that. And in order to do that, you have to have a good strategy, right? So hopefully that answers your question, Ian. Thank you for tuning in. All right, next question is from anonymous Zoom user. How do I get the app? So if you go to the Google Play Store, you can type in Earn App or Mode, Earn App, or any combination of that. It'll be the first thing that pops up, if you do that. So that's the best way, and you can just download it for free on your smartphone. Next question is, what is the target revenue or EBITDA multiple for the new app that you acquired? How much cash versus stock? So the QR app, I believe, was a 3. It was about a 3x or so. Maybe it was like 3.1 or 3.2. It was definitely in the same range that we see on cash. And then there's typically when we do acquisitions, it's a mixture of cash and stock that we do. And that really depends on the company. Sometimes it's as high as like, a 60-40 where it's 60% cash, 40% stock. Sometimes it's 20% stock. For that specific deal, I don't want to misspeak, but it was something.
It was 20%, Dan. It was 20% stock. Yeah.
Great. Appreciate it. Thank you, Prakash. And so, it was 20% stock and the rest was in cash. But a very attractive multiple, especially for a company that has the amount of subscription revenue that it has. And also has been around for quite a while. That app had been around for, well over like 5, 6, 7 years. And when we were looking at the cohort data, meaning people that downloaded that app 6 years ago and subscribed as an investor or as a user, there were certain cohorts that they were still 25% of the people that started 6 years ago were still subscribed, right? Which means that app has longevity. And so we look at things like that when we're making our decisions to try to acquire these companies.
And the 20% shares was 50 cents also, right? The same price as the current price on the crowdfunding.
Exactly. I think that's an important call out in that, when we're acquiring these companies, we are, for the most part, also providing it at the same share price that, our investors are investing in without bonus shares, right? And so that is something that we were also doing. And that's a differentiator for us as an acquisition company in this space that other people don't have, right? Other companies that are buying apps, and there's not a ton of them, but there are a few. We have this engine that we have essentially built, and then some of those founders, they see an opportunity to, cash out a bit, but at the same time have another bite at the apple by, having some stock and ownership in the company, which aligns incentives, right? So that's how we think about it. So great question, Robert. Okay, next question is from Steve. What is the minimum amount of shares you can purchase? I don't know the minimum amount is 2,000 shares, which is $1,000. That is our current minimum. That is for you to buy shares in the company today. An alternative is that we have this rolling out very shortly right now, which is if you are a user of the Mode Earn app, you can actually earn points and redeem them for shares in our Reg A. And so that's something that is rolling out probably here in the next couple of weeks. We've just been waiting for our broker dealer to get us the portal set up to be able to do that. So if you don't have $1,000 to invest, we wanted to create a way for everyone to be able to participate in this, to add value, so you could earn your ownership essentially. And that's really that idea. I believe we were the first ever company to ever get qualified by the SEC to do something like that, and we're proud that about half of our community today are actually people that are users of the product that earned and then converted their points into shares, which allows them to have skin in the game, even if maybe they didn't have the money to invest, right? Which is still value for us because we would have had to pay them money for what they're doing in our product. So that was pretty unique and pretty awesome. Okay, next question is from Anonymous. What happens to our users? What happens to our shares if Mode is bought out by another company in the near future? So this is a great question. If Mode, for whatever reason, gets acquired prior to an IPO, everyone would essentially have their shares get valued based on the value of that acquisition. So, if whatever your ownership is of the broader company, you would get a pro rata of what that is. So that essentially gets treated almost like an IPO to some degree, but it's an acquisition to a private company. So your shares are ownership in the company. You are an owner in the company. And so whatever happens to the company, that exit will transcend to every single shareholder in the business. So, in both cases, there would be a liquidity event, whether it's an IPO, whether it's an acquisition. So hopefully that answers your question. All right, next question is from Melissa. Or Melicia. Is the investment club the best place to buy more shares before Friday? If you are an existing investor, Melicia, you can go into the Mode Investor Club and you could take part in the stacking of your shares. However, if you just invest through the regular site, you can scan this code, for example, and you do it through the same email that you invested in, we will automatically do that for you on the back end as well. So you're able to go through the Mode Investor Club if that's easier for you, but you can also just go to the site, invest.modemobile.com. And if you invest there, we'll be able to match that up and you'll still be able to take advantage of that stacking if you want to reinvest as an example. Thanks for that question. Next question from Artanya. How does an investor see how many bonus shares they received according to the amount they invested? So this is a great question. So this is why we created the Mode Investor Club, so that you could see how many shares you own, how many bonus shares you've gotten. It was like a tracking solution. If you're not an investor yet, the best place to see it is on the website. We have a little slider that you can kind of put in, and it will essentially update based off of what you're likely going to get. And also in the checkout itself, in step 2, you can actually select an amount or put a custom amount that you want. And the calculator will adjust and show you how many dollars in shares and how many shares you'll actually receive before investing. So those are the two best ways. You can go to invest.modemobile.com and you can either check out the slider or part 2 of the checkout, or you can go to the Mode Investor Club and if you are an existing investor, and see what you already own. Okay, next question. We have 2 or 3 more minutes here. After you go IPO, how do we get our shares onto our investment platform? That's a great question, anonymous attendee. So we have essentially a transfer agent that is currently who holds the shares. So the equivalent of a transfer agent is, when you have your shares on Robinhood, there's a transfer agent that's holding that in that brokerage platform, Robinhood or Fidelity or Charles Schwab, insert here. So what will happen as the company goes through that process, you will be able to request those shares to be transferred to the brokerage platform that you ultimately utilize. And there's a process that occurs when a company goes public, and then essentially that transfer agent transfers those shares upon IPO. So there will be something that will be sent out to all of those investors, and a process for you to be able to have it shown in your desired brokerage platform. It's currently not able to be in that platform because the company is not publicly traded at this exact point in time, which is why we have a third-party transfer agent that holds all of those. And that's also connected in the Mode Investor Club, that you can click the link and it'll go to the company called Transfer Online. And that is who our current transfer agent is today. And so we'll keep you updated as we get closer to that date. So hopefully that answers your question. Okay, last 3 questions here. Are you planning on co-partnering your tech onto other networks like Verizon, T-Mobile, et cetera? The idea here is yes, we are, as mentioned, the closest company to make the smartphone freer better. We are in talks with some of these carriers already, to be honest. there's obviously a very long sales cycle with how carriers operate in terms of how they think about their business. But what I will say is that 2026 was the first ever year that the cost of smartphones, and you're going to see this on other electronic devices, has gone up instead of down since COVID. And during COVID, that happened because essentially all the factories that make these phones and make these products were shut down. So there's a supply and demand constraint. What's happening this year that's never happened before is, and you can look at this if you're an avid stock market person, you're going to see SanDisk, you're going to see these companies that make RAM, because all that RAM is being utilized to make compute, for AI. And so the cost has gone up significantly. Like we're talking about for phones that used to be $50, maybe that phone's $70. That doesn't sound like a lot, $20. But for something to go from 50% higher in price, so you're going to see anything from low-cost smartphones to iPhones go up in price because of the chip cost has gone up significantly. So what does that mean for the carriers of the world? Verizon, T-Mobile, they all have budget contracts as well, right? It's not just postpaid. And so, someone has to eat that margin. And the phone business, like the actual smartphone business, is not a very high margin business. We're talking about a 1% gross margin, meaning that if you sell a phone for $100, you maybe are making $1 to $2 profit on that phone. For something to go up $10 to $20, that is significant. So something has to give. Where are they going to make that money? And then if you pass it on to the consumers are strapped for cash. Consumers are at an all-time high credit card debt. Inflation's at an all-time high. And then, so what's happening is people are having to unsubscribe from their postpaid plan and go to prepaid plans. And so if you actually look at the earnings calls from Verizon, from AT&T, and you look at Cricket and some of these other companies, they are citing losses because of subscribers that are losing. And actually the CEOs are saying that we're concerned about what's going to happen in the business. So it's actually an amazing time to have a solution like ours, because there has to be something that people can do, because the phone plan, and the phone is the 8th most expensive expense in the average household, right? So think about it, it's like your mortgage, food, etc. The phone plan is 8th, right? And so it's a very important thing. And so we are the closest company to make a free phone, a free smartphone, free plan. And that is a massive market. And we're really excited about being able to do something like that. Obviously, we're working towards it. But it's something that we're very hopeful, and hopefully we'll be able to announce one day soon to the broader community here. All right, that was a great question. I didn't expect to spend so much time on that one. But I will answer this last question that we have here from Michael. Is it possible for Mode shares after IPO to hit $20 a share? So Michael, that's a great question. I can't answer that question for you because that would be very speculative. And anyone that tells you, hey, this shares price is going to be this, you probably shouldn't invest in that company. What I can say is that we are working and doing our best to make Mode a highly profitable company, have the right story and narrative to create the most value for our community and our shareholders. And we do that every single day across our entire team. And so we are very excited, and we think that there's a lot of upside opportunity here given everything that we shared today. And we definitely appreciate you and everyone else that's on this call today for joining us. And we hope you tune into the next one. It's going to be an exciting one, especially as we announce some of our AI initiatives here. So thank you so much for taking the time today. If you have any other questions, you can go and email us at invest@modemobile.com. Provide any feedback on this webinar. It's always helpful to get feedback from you guys. And you can also call this number where our investor relations will answer the phones. And if they do not answer, leave a voicemail. They will call you back. They're getting hounded right now, just given the size of this community and the thousands of people that are on this webinar. And definitely remember to scan this QR code here so that you can get your 5% bonus. Share price changes on Friday at 5 p.m. And thanks again for joining, and have a great rest of your day.
Thank you all.